welcome once again, guys. It's a great, I think, as we were talking right before we started recording, it's been a great week. I would say markets are kind of stable. No major shocks, I would say, which is great. But on the other hand, I think uncertainty is still there. So let's talk about all the factors. Let's talk about where we stand today. Interestingly, we are not too far away from where we were last week, and market is almost going nowhere. So let's look at the charts. And this is where I think we were last week. And we are like, within 100, 200 point range. And the candles are becoming smaller. So what does it tell us is that market is kind of spent. This whole bull run, if we can call it, because of course we had a pretty crazy crash before that. But the bull run and what they're calling it as one of the longest winning streak, which happened from here. This was one of the fastest pace of percentage growth in S&P 500. That's what they were talking about. And as it happened, yes, it was became sideways since then. So it was not a kind of uneventful week while Trump tried to play up this UK deal, which is kind of a nothing because UK was never a big issue because UK never had a major tariffs. They only had the 10% baseline, and that is still remaining. So there's no real deal out there. So I think this tells us though the template here. The template here is that it was a theater of which we were always expecting. That it is more of a trying to get these political wins while most of the tariffs, the big tariffs, will be reversed. Other big thing which last week I think market played up were the whole thing around China talks going to be started, which actually built up a little bit of momentum. People realized very quickly that Besant already downplayed it also, that we are just starting. So there is not hardly anything in that. So having said that, we are still sitting below 200-day moving average if we look at the chart. So no directional breakout. While we have kind of last week we had focused on how we have come to the mean, like we call it reversal to the mean, where we are very close to 200-day moving average. Interestingly, as you say, markets are always work in unison. So you will see Nasdaq being similar. The ETF which we track closely on Nasdaq is QQQ, and it's almost looks like a failing at the 200-day moving average. So from a chart perspective, we are stalled. It's looking weaker. We are not making new local high either on S&P 500, which is definitely concerning. So I would say unless any external event happens, markets are looking tired. Definitely a dip is due. Now, on the other hand, and as we were discussing right before the call, it's almost impossible to play this market with certainty because of the news cycle which Trump creates. But remember, right, we had talked about in the middle of the April, when after the big drop, that this was the worst case, and we were pretty confident, and that played out. I think that's a good news. And I would say now that most of the trade war stuff has been pulled back from both sides, in fact, not just US, China is also realizing that it will hurt their companies, and they are much more open. They, in fact, even reduce tariff on certain specific items even before the trade talks begin. So basically, it's a good gesture from both sides, and everybody's watching US-China negotiation. So you will see, even though there was this built up by Trump on UK deal, market did not react much after the initial reaction because it's not important unless we get something from China. Now, other factor which we have been talking, so I think that was a trade deal aspect and the news play. But on the other hand, what are the macro things which are troubling the market? And one of them is the yields are going up again. This is definitely not a good news because last week specifically, we had a pretty good auction on 10-year, which had given us, pretty good positive scenario. And market was seeing it as, a good deal, where they said that there is a lot of demand on Treasury. That 10-year auction was actually critical because of this narrative around, how people are foreign countries are dumping. On the other hand, in the secondary trading, so auction is the primary sale of the Treasury. The secondary trading, we are seeing the yields rising up again. And this is something which people are watching very carefully. Of course, it's not concerning yet, as we have talked multiple times. Unless it breaks above 4.5%, market is not going to panic, or there won't be any special reaction. And we have also discussed that there are a lot of tools with Besant to go and play around. They can do a lot more buyback. to manage this yield. So I would say not a concern yet, but something to watch out. Gold, we talked last week, and we were actually in the correction mode at that time when we talked last week. And we did talk about that this is just a correction, and we bounced back to test the highs. But I think that is, we are now kind of looking again, very similar to the S&P 500, that after a big bounce, gold is looking tired. But I think the trend is intact. We are not making anytime we see a correction, we are not seeing a lower low. So these are very simple, I think, technical things which everybody can do. So just trying to highlight it here, that you can just zoom out on a daily chart and you can say whether it's just a correction or not. But I would say we are watching these risk assets. We did talk about money supply a few times, so I would not repeat it much, but there is nothing changing there either. I think the big news this week was the Bitcoin, which I think we have been talking about for maybe 3 weeks now about this breakout. And we have now been, this is accelerating in a way. So that is, I think, definitely a big news. We always, like, as if you are all access subscriber, we had been highlighting it multiple times during this breakout. But I would say it definitely has a correction due because of the pace of, but you never know, because Bitcoin works on the FOMO effect, limited supply. And what is driving it, I would say there are two factors. One is, of course, MicroStrategy is one of the primary buyer, and they're consuming almost all the supply. We did talk about last few times on how the new companies are coming, like 21 and so on. Even last week, we had another one called the Strive Asset Management, which launched with the ambition of creating another innovative product on Bitcoin Treasury. So Bitcoin Treasury market is definitely accelerating very fast. We also had some couple of positive news around the states, like the New Hampshire passed the bill to add to state treasury up to 5% into gold and digital coins. And basically they put a floor on the market cap of those digital assets. So only Bitcoin qualifies for that. So in other words, even though the wording is digital assets, they basically approved Bitcoin buying up to 5% into the treasury. And second bill, which was Arizona, even though the purchase of Bitcoin was vetoed by the governor, there was another bill in motion in parallel, which in Arizona, which is more about doing it as a cash neutral, basically not using taxpayer money or treasury money, but ability to, just like federal government, they can acquire Bitcoin. So that, I think, has been a positive factor. And by the way, they have identified specific revenue sources which are dollar neutral and beyond that. So that's why it's even bigger positive, is they've actually started identifying and they're creating a template for federal government of how they can acquire a dollar neutral Bitcoin. So those kind of things are, I would say, a big step for from a government perspective and government entity perspective last 1 week. So I think that is one thing which is driving the Bitcoin next rally, I would say the next phase. And this is what I think is the asset which is shining in this whole mayhem. In the uncertain world, I would say Bitcoin is the only asset which is very certain right now in terms of we know the bottom. We know that every time it falls, there will be these corporate treasury companies. They are able to raise money and they are going to buy. And then we know that their adoption is growing and so on. So this is where we are. I would just summarize here and hold for a few questions. But this is where the summary of the market is today. In the meantime, I think we have quite a few people joining. So feel free. So if guys, if you missed it, I think we're just we started. Originally, we were also discussing how. Just let me just repeat that we have, there the uncertainty and the Trump effect will always be there, and I think we were talking about how we can use that to our advantage. Like I think that should be the focus, and we are getting a lot of feedback also. And let me actually come that up. Yes, please go ahead with your question.
For you alluded to what you were discussing before the talk began, but were you talking about systematic trading, like quantitative models, or what were you talking about before?
Mhm. I think, yes. So let me talk about that. We, of course, as you know, we are within Proflex. We believe that options are a great tool. So we definitely use a lot of that. So when you talk about quantitative trading, yes, we do have our internal tools in terms of how to identify the right trades. But yes, I think from as an individual investor perspective, I would say very simple things you should consider is that market is not going to be a directional market. That is what we were discussing because of the way Trump is playing it, the way the market is already sitting on pretty high valuations while we have a lot of uncertainty every day and the news cycle, which impacts the market big in terms of trade deals, in terms of, the potential hurt to the economy, which Trump is creating by all these, we can call it blockades, changing the tariffs every day. So what we were hinting at is building strategies as a very basic step in terms of hedging and using these ups and down moves to your advantage where you can. Means we never know what if the whole 4 years, next 4 years are sideways. What if there's a one, means Trump always keeps doing this because these trade deals with 70 countries is not going to happen in a few weeks. And how many hours in the day do even their team have to even negotiate? Maybe they will announce one deal this month, next month. So there will always be, but definitely means it's going to take 8 to 9 months. So forget about 4 years, but we are saying like at least it will take 8 to 9 months to get some certainty across. So right now market is still guessing. So my idea was very simple, that why not build strategies using options, and that's what we were saying. You can use it to your advantage. And one thing which I keep getting from a lot of people, like individual questions, one to one, or through subscribers also, like what do I do now? Means is it a buy time? Is it a sell time right now? Because we are still sitting from way down from all-time highs. We are way higher than where we already fell to. We are right now in the no man's land of the market. We also discussed how we are indecisive on the chart. Like we are neither able to break out above 200-day moving average, nor are we falling down. Now your money is sitting idle. What do? Like you're scared to buy, and you are also, if you already hold it, you are not able to sell because you don't want to miss out. So in this scenario, I think hedged approach is the great approach. That is what we were discussing. And to answer your question, I would say yes, there are a lot of tools you can use, but I don't think every investor has time or the resources to build quant models. We do have certain things which we use. We can talk about some of them. I don't think this call is the right place, but we can talk about, like, you can do some technical analysis, just like we tried to do a little bit of it here, very simple things. It goes a long way in improving your trade results or improving your long-term performance if you start looking at a very basic things, like whether it's uptrend is strong, whether there are higher highs, higher lows versus lower highs, lower lows, whether it is where are we with respect to the key support levels like 200 moving averages, the trend lines. I think almost everybody can understand this. You don't have to do very complicated technical analysis. Most of these are self-fulfilling because everybody's following these basic principles, and also they are very well established law of trading. So those are the kind of things which give you a framework. I mean, I'm not suggesting they are like scientific and they are you should use them as your trade rule, but they give you a framework. And when you have a framework, you can then use your strategies with better odds. So that's what we talk about. So I hope I answered that question. So feel free to add your question in the chat if you have any. So I will move on. In the meantime, we had one topic which I think was identified from the by our team on what's going on, which is very contextual in May. By the way, there is one topic which people talk about, like sell in May and go away. You may have heard about this quote. So we are going to look at, okay, is there a seasonal trend here? And I'm going to talk about totally opposite trend, which is May is the biggest stock buyback month. So let's talk about that now on with some data. So give me a second. I will share some of the charts which I have seen with this respect. So I'm just looking for the screen. In the meantime, yes, what I was trying to say is that one thing is we are technically stopped at a place, but on the other hand, there's a lot of money flow coming in right now. And we did talk about how retail is pumping in money. But let's look at this. So this is a very good chart. So basically what this says is when we are doing investing, we have to look at what are the tailwinds and what are the headwinds. And one of the big tailwinds usually is we talk about money flow. And in this case, this is the S&P 500 chart. And usually a company before earnings has they cannot buy back their own share. There's a blackout period. And this was a chart which was shared very widely on Twitter in late April, that how So you will see different versions of this chart where this was where people were talking about on a certain date where 40% of the companies were out of that window. That means there will be a lot more companies buying. But right now we are almost here. We are talking about, if you look at May 9th, especially next week. So next week we have almost 90% of the companies, or 80 to 90% companies, which are out of their blackout period. Now, why is it crucial? It's crucial because they only have a certain time within which they can buy the stock. And now let's look at the numbers. The buyback announcements year to date on a May 2 based on Bloomberg is highest in 2025. So even though we are talking about the uncertainty and the business confidence, what we are seeing here is that the companies and the corporates are allocating more and more cash. And the reason being the amount of cash generated is still increasing, as we have seen with all the Max 7. And mostly, by the way, these numbers are becoming bigger and bigger, mainly because of those top 10 companies, because they are huge cash generating companies. So this definitely skewed when we look at S&P 500 numbers, but that's exactly the truth, right? And even the stocks, the index goes up because of those few stocks most of the time, but they pull the whole index up. But this is one big tailwind because the amount of the dollar value of buyback is the highest. And if you look at another chart, this is based on the all the buyback announcements. We are seeing very big numbers, and again you can see here that May 2025 has been one of the very big chart in terms of buyback announcements. So this is, I think, we call it as a tailwind to the market while we are struggling here. So this also gives you a floor when you are trading. You can assume, especially you can look at those companies, you can look at the company you're trading, and you can see that there is a better floor for that company when you're out of the blackout window for that company, and you are able to make a little more aggressive trading, or you can say if you're doing certain trade or you're entering a stock based on some other reasons, you can have a little more confidence. So these are the kind of factors which are good and useful in the market to think about when to buy, and maybe some more confidence into the bottom of the market. So this was one of the topics I think which we wanted to talk about, which we had identified as a factors to watch, and what are the macro things which work. Anything else? If you have anything to comment on, feel free to say. But I think it's a matter of now going back to this. When we started, we said sell in May and go away. That is a pretty big thing, but it's a very common thing being seasonally. May is the top, and it has worked in the months when in the years when market has run up to May. This time we are in a very different situation. So let me also clarify that usually S&P 500 does very well in the first 4 months, and this time we have had this uncertainty, and we are sitting on much lower levels versus where we would be in a typical run up like last few years. So, and now we are talking about this buyback tailwind. Can that support it? Can that support the market, especially the big tech companies? And as we have always been discussing, right, is because of this whole macro tailwind so headwind created by Trump, any resolutions on trade war can kill this narrative this time. You cannot really rely on sell in May and go away. So that is the summary I wanted to bring by using that data point. All right. So we have one more bookkeeping thing, an action item from my side, which I will take up before we take rest of the questions. Yes. So one thing which we have been doing, I think, very regularly as Proflex is, we used to do this investor days. I think many of you have attended at least one of the events. If you have not, let me explain you. So basically, we do typically every 3 to 6 months interval, we do an event where we share a lot of our research ideas. We share a lot of some special topics and special learning subjects. And most importantly, I think this is the opportunity when we meet with a lot of the investors in our network. We learn from their own experiences. We really enjoy that. Like I especially like talking to people on what they are, how they are thinking, and it's very difficult, like on a Zoom call when we do face to face. So this is what we are doing. So we are doing it slightly different this time. So the feedback, we have been listening to a lot of feedback from people who have attended previously. So let me, and first of all, let me tell you that we are ready to, uh, we have the dates and so on. So let me just share this. I think I have the dates announced, created already. Yes, here it is. So we have our Proflex Investor Day on May 18th, Sunday, 2 p.m. In Santa Clara, which is usually comfortable for most of you. Our goal here is to um, share all these details in terms of macro picture, macro discussions. What is happening in Trump economy, especially like in around uh, like this day-to-day changes, like monetary policy changes by different countries. Like what is the effect of somebody like the China changing their monetary policy, or the EU changing their policies because of Trump trade. There are a lot of big changes happening in all these policy making, and we do talk about the Fed, how they are reacting, what is the impact on inflation, all these factors in the next few years, especially with the change in direction and change in the way we are trading with the world. Second part is, as I said, this is going to be, we are calling it an options workshop because we do this every week. So our goal this time was, based on the feedback we are saying, is like, let's make it more actionable. So, and I think a lot of you have started doing options. If you are already part of All Access, you are doing a lot of option trades with us. We started discussing this in our group also. So this time we are doing special attention to how to build a kind of actionable portfolio in terms of with strategies on options, in terms of using volatility to your advantage, using uncertainty to define a strategy which you are not worried about deploying money. That if you, even though you're positive about a stock for medium to long term, how do you use those kind of option tools to construct those strategies? And most importantly, it's about options give you a way to achieve your goals. So the fun part is there is no right way of investing. So what we call it as, we are going to discuss, like you can choose your own leverage. You can when you or you use options. Some people are more aggressive, some people are more conservative. You can choose your own hedging. For example, some people prefer to not clip their upside and they're willing to take more downside risk. Other people are more, I don't care if I get double the money, but can you just make sure I don't lose my money? Like those are the kind of things we are going to talk about. And in terms of macro picture, we are going to discuss, as I said, what are the risk assets which will benefit, what are the new economic world orders, tailwinds, and patterns. So that is the goal. And as I said, this is going to be on May 18th, which is a Sunday and afternoon at 2 p.m. So that is around, I would say, 9 days from now. So looking forward to see most of you there, and we will have some lot of fun. I think most importantly, as I said, it's a big thing for us in terms of networking, in terms of seeing many of the faces, whom we have not met before, and having that discussions, which really make us all grow together. All right, so I do see a question here on the chat. It says, could we have a Zoom setup for the investor day event? So, Avinash, I think this is one thing I would say we have tried before. Means it's not a very pleasant thing. Like, for people, we have done it. We will try to do that, but we have had a lot of technical issues previously in our locations, like in terms of sometimes we didn't have audio working, sometimes we missed out. But having said that, yes, means definitely we'll try our best. Unfortunately, based on means we committed it a few times last couple of investor days, but usually we choose a location which is not in our control because it's an in-person event. Sometimes it doesn't work out. So I won't be able to guarantee that, but we will do our best to have some sort of, listen in mode. So that is something which we always try to do. All right. So I think that is all I had for today. And I think I will wait for a couple of minutes in terms of questions, but otherwise we can enjoy our weekends. And right now you can unmute yourself if you want to comment something, and we can discuss that as well.
Hey, quick question, Raman. I was looking at the coins divergence from Bitcoin a little bit of late. Seems
Mhm.
like that just started at the beginning of last quarter or mid of last quarter. Just curious if you had any insights or if you've investigated into that any further.
Are you referring to Coinbase specifically?
Yeah.
Yeah, I think if you're talking about that particular stock, I would say it's more about, some of these things are because the way market had run up for the rest of the crypto. Some of these stocks, like, Coinbase is more correlated to altcoins versus it's something like MicroStrategy, which is a pure Bitcoin play, versus
Okay.
Coinbase, which is more of a means heavily dependent on how the staking does, how the other altcoin market is doing. So if you see, last few months have been pretty bad for the other coins and so on. So we have discussed this before also in when we talked about how altcoins are losing their appeal with Bitcoin leading this cycle. Usually the altcoins are doing way better. But I would say, and I'm not worried about this because overall as a sector, this is it's going to gain. And what happens in these kind of cycles is that the altcoins sometimes catch up later. So definitely some of these companies which we usually follow, they are pretty strong in long run, but short term there are headwinds for each of them of their own, which is like for MicroStrategy, it's a pure Bitcoin leverage play.
Yeah.
Coinbase is more like a overall crypto industry play. And I think that has a much bigger upside in medium to long term versus Bitcoin has a short term. It's a leader and it's running away too fast. So yeah, I think those are the kind of things. And by the way, one more announcement before I say, because this was also a very specific question for and for if you're All Access subscriber, we are going to also start office hours. I think that announcement is coming soon. So we are starting more opportunities twice a month for All Access subscribers to join into a informal call to discuss any trade or any of these things, which are very specific question and not probably in interest of everybody on this kind of a call, which we do weekly, which is more
Okay.
macro. So this is a great, I think, leeway into discussing that that we are launching that from next week. That will be our first office hour, and that will be something which we can take up even more for, especially for subscribers who are following some of our trades and our strategies specifically. We will be able to discuss more details about that. And this is again, as I said, we are learning from the feedback which we are getting from all the people who are in our Proflex ecosystem, who are in a subscriber base. So
All right. Thank you. Thank
yeah.
you, Raman. I appreciate it.
All right. So I do see other questions here. One of the question is, do we expect Uniswap and in general Ethereum protocol related coins to pick up this cycle? Yeah, I think it has been a challenge. So I have talked about this a few times, but let me repeat that. So what is happening is it is the crypto 4-year bull run, which we used to call it, like 4-year cycle. It has played out differently every time. Last cycle, we had very significant DeFi based and boom. This time, what we are seeing is that DeFi, and which for those who don't know, DeFi is decentralized finance, where you're doing the trading on smart contracts. That has gone left behind, and we are seeing more and more, focus on Bitcoin. So I do see that Uniswap specifically should benefit under the new Trump policies and all, but at this moment, it's more about the sentiment. And because Ethereum itself has lost its way in terms of where it, what is their next storyline, because what they did is they tried to become proof of stake just in the hope of becoming more more like money, more like Bitcoin, actually, to be frank. They were trying to create a story that we are less energy, like we are more green and so on. To be frank, the core decentralized people do not like it. And when you start trusting staking based approach, and this is why I think we had talked about never buying Ethereum has been really a big underperformer, and we have been talking against it for last 2.5 years, ever since they moved to proof of stake. That thesis is playing out right now. So let me tell you what is happening. What is happening is something like Base. Base is a Coinbase protocol, which is launched by a centralized entity like Coinbase, and they created layer 2 of Ethereum. And Base is getting much more, you know, uh, growth in terms of as a layer 2 of Ethereum. Now there is nothing there for Ethereum. Now that is question on Ethereum. It's not an answer on Uniswap or something. Now we talk about protocols on Ethereum. Uniswap still works on other chains and layer 2 and so on. You can it's about the protocol. I think that still has a pretty solid long-term view, but I think it's probably a dead money in short term because of the way things are going, uh, really low on their sentiment in terms of the altcoins. And that's where I think all these, even good projects like Uniswap or there's another few ones like Aave and so on, which are actually being used, they're growing and they're doing very well on the Ethereum ecosystem. But I think the headwind of Ethereum itself not doing very well because of their own ecosystem, their own narrative basically is failing. And I would say I can blame it on proof of stake. That was the biggest mistake of the Ethereum community, and we exited Ethereum. But I was still hoping, I would say that the all these protocols which are still solid, and they are not dependent on Ethereum, by the way. Uniswap is very much running on multiple protocols, all the Ethereum virtual machine based protocols, and they are doing pretty well. But yes, the sentiment is low because of Ethereum, and I would say I would not be means if you have a allocation into these kind of coins, I am questioning those. As a part of a bigger crypto portfolio, you can have it, but I would say there's nothing better than Bitcoin ecosystem right now. So we have been talking about allocating much bigger to Bitcoin ecosystem. If you are all access subscribers, so all our model portfolio and so on. So I would say that is still going to do much better in short term. But I think all these things will catch up in a later part of the cycle, because that's always the case. Means we are seeing a pro crypto administration in US. We are expecting some of these protocols which are very solid for them to become like they will start becoming more like corporates. They will start doing dividends. They will start doing. There's a lot of big roadmap from these blockchain companies to share the fee they are generating with token holders, and all that is on the table now, which was impossible with the previous administration. So now we are talking about actual blockchain based ecosystems going like corporate route, and I think that is where the value will unlock in many of these projects. But yeah, I think what to answer your question in very short term is it's a sentiment issue which is not improving in short term on Ethereum ecosystem. All right, so these are good questions, I would say, and especially if you are into the non-Bitcoin side of crypto investments, I keep repeating every week here that if you're new in investing fresh money, or if you are increasing your allocation without giving lion's share to Bitcoin or its ecosystem play like ETFs or other plays, I would say that you should not consider other smaller coins, or you should not consider altcoins. Means yes, definitely they have their own position in a bigger portfolio, but not in as a core investment strategy. That is not going to work out. And I've been saying this for a very long time now, I think for more than 2 years, that being in the system means I have spent a lot of time in this blockchain ecosystem myself. I would say it's very clear writing on the wall. This is a Bitcoin cycle, and we are going through a hyper Bitcoin world where assets are moving at a scale where we are seeing that the Bitcoin as a asset class is going to at least compete with gold. It's already competing. I mean, it's 10% of gold right now, but I would say it will become sizable to compete with gold. That's the expectation. Now, whether gold comes down or whether Bitcoin goes up, that and how much time it takes is a question mark. But I think we are on the path to become that. So that's where I think the medium to long term path is that. And the good news now is that most of these things, which we used to do when you're investing in Bitcoin, one biggest advantage of doing this is on all the Ethereum coins, you cannot do options, you cannot do hedging. Or even if you can do, like, for example, Ethereum itself has a ETF. the liquidity on options is very bad, or all these things are like the ecosystem itself of the investment world is growing so fast on Bitcoin that gives you much higher return. So I think that is another tailwind for Bitcoin, where you can create more and more profitable strategies. Then why would you deploy, even if you go like if your risks are higher, even though the upside is higher, a lot of serious money will not go into those smaller coins. So that is what is troubling the altcoin market. And Bitcoin is a clear winner is in this cycle because of the tooling, because of the as we also use heavily options. I think like if you see all the serious money, hedge funds or big institutions, they're not going to invest into something which cannot be hedged. So that's, I think, the thing we have to all look at when we are considering our own investment decisions. All right, so I think we are done for the day. Thanks, everyone. No more questions here, so we will close it for this week, and have a great weekend. And as I said, next week we will not have our usual weekly call. We have, again, a reminder. We will send out more details on the Investor Day details. Feel free to ask about that in our WhatsApp group. I'm sure the team will post it with all the details very soon. So looking forward to see you all there on next Sunday. Thank you. Bye-bye.